Hello traders, Alfonso here from Set and Forget Online Trading Academy. And yes, this is Apple. Apple stock, one of the most liquid. It was once the most liquid, now Nvidia is. So one of the most liquid, Apple, most loved and most worshipped stocks on the planet is about to teach us, retail traders, because I am also a retail trader, a very expensive lesson. And no, you don't need fundamentals analysis for Apple when you look at supply and demand, or you don't need Bloomberg breaks or Tim Cook from Apple whispering to you. You just need supply and demand like these imbalances on the monthly time frame that I'm going to explain about. Price action and a little patience. So the hardest skill ever created. Okay, so patience. So are you patient? Well, we'll see. Let's dive into why Apple could drop, and we expect Apple to drop like a stone straight into the next monthly demand level at around $210 per share. So it's like, smaller time frames can turn us into absolute dummies. When you look at the charts in the 4 hour and the 1 hour, you have no idea why Apple is dropping now, why it was rallying, blah, 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 why it's been doing nothing for a few days. So, well, you might be thinking, okay, I'm going to buy. Well, this could happen again, obviously. On the daily, we could have like price rallying even higher. We have the closest demand here on the daily, but the daily is no longer in an uptrend. So what happens when you look, or we look at these smaller time frames, we become absolute dummies. And sorry for that word, but I'm not calling you dummy. It's just a way of saying, of speaking. Okay. So Apple, the king of liquidity, because it's one of the kings of liquidity, together with Nvidia, Microsoft, Google, the Magnificent Seven. Okay, so it's a heavyweight, okay, champion of market capitalization, as I said already, and the stock that every beginner wants to buy, usually at the worst possible moment. So, like almost always, because if we keep on doing the same thing, well, we're gonna have the same results, losing. But today I'm going to talk about what really matters for the next weeks, probably a year. This is a long-term type of analysis for Apple, swing trading, long-term trading. Okay, you can use also options, stock options. So the monthly demand level structure down there at $210 per share approximately. This is crucial. When we look at the past, this trade, I called this trade many months ago, back in around 2024, at the beginning, where I recorded a video, also in the community, and hopefully many people took this one, the same way that this one, okay, played out. So these are imbalances on the monthly time frame, not the little tiny 15-minute candlestick charts that make us behave like confused chickens with our head, okay? So why is Apple setting up a major drop again? Okay, this is what usually happens. I'm not saying that this is going to happen 100%, but it looks like it's going to happen the same way it happened here during 2024, the beginning of 2025, and here during 2023. After a very strong rally here, it dropped demand. Stronger rally, it dropped demand. Even stronger rally, this is what we are expecting. Okay, so buying right now is a little bit of a suicidal mission for Apple. Okay, not even for short term and scalping. It's not a good idea when Apple, we're expecting a sell-off, a dump in Apple stock, to buy shares of Apple stock or use bullish option strategies. Apple has been in a long-term bullish trend for years, but now if you didn't take advantage of smaller time frames or these bigger time imbalances or smaller time frames on Apple stock, now you are too late. Okay, so most traders forget the long-term bullish trend, and they look at the smaller time frames, like I said, on the 1 hour chart. So, okay, I'm going to buy from the strongest impulse in a long time, and then it drops again, printing now new lows and expecting new lows over here. So, rallies, strong rallies in the stock market, okay, you probably have learned that, through bad experiences. After strong rallies, we eventually need corrections, as you can see here on Apple. Big imbalances like these ones act as magnets to price. So we're expecting price to be magnetized, attracted by these imbalances on the monthly time frame. Smaller time frame signals, intraday and scalping signals for stocks make people behave like total dummies because they don't look at the bigger picture. So you don't know, you are in the forest and you don't know if you're heading south or north or you just lost. What do you need to do? You climb to the top of a peak, to the peak, top of a mountain. And then this is the top. Oops, where am I? Oh my God, I'm expecting this. Oh my God, I should be running home because this is not a good idea. It's gonna rain, or what Japanese call some candlestick patterns like the dark cloud cover. Okay? Well, I don't see any of this here, but maybe in the weekly, dark cloud covers, nothing. Well, this could be considered dark cloud cover, but it's like at the end of the move, there is like a bearish pattern, similar to engulfing pattern, and that determines the end of the move, usually after a long rally. So a new strong demand level has been created here for Apple stock, okay? And we are expecting price to drop down there. This whole rally happened during 2025, August, September, October, and now November. It looks like this is going to happen. A similar scenario is happening on the major Magnificent Seven, Microsoft and everything, Apple, Amazon, Nvidia too. So after such a strong rally, okay, buying is just not possible. Price is slowing down here. We have large candle, even larger candlestick body, smaller candlestick body, and this is smaller obviously because there are still like 10 days left for the November 2025 candlestick, Apple candlestick to close. So just look, as I said before, at the last two times of these two imbalances. Massive rallies, okay, big monthly imbalance, and then below price, retail traders, fear of missing out, and then start buying at the top, breakouts, and then price drops as expected. So, and then price drops to the imbalance here, there, and then it plays out beautifully. And the cycle repeats again and again because price is fractal, and because humans, we humans, myself included, are emotional creatures who love to chase green candles, white candles, okay? So we're just expecting that. So what do I expect for Apple stock? The Apple stock forecast analysis for 2025, the end, the last quarter, and 2026, I'm expecting price to drop down there, and then probably during 2026, price will start rallying, and then another bullish market will resume for Apple stock. A correction is not just possible, it's quite probable. And hundreds of US stocks, including the Magnificent Seven, top ones are like Microsoft, Nvidia, and Tesla are dropping. And also their respective ETFs are showing the same pattern, similar patterns like this one. The US indexes are also showing, let's take a look at SPY. Okay, we are expecting this on SPY. Okay, S&P 500. Exactly. On the Qs, NASDAQ, we are expecting exactly the same thing. So, and the NASDAQ is the tech index. So, and Apple belongs to NASDAQ. Well, they're highly correlated. So this is classic supply and demand behavior. This is not bearish fundamental analysis. This is pure price action trading plus imbalances combined, the only real drivers of the market. So why retail traders get destroyed? Because retail traders, they don't look at the bigger time frames like the monthly and the weekly time frames. They're zooming into 50-minute charts, trying to find the next trade, next adrenaline boost. Okay, they ignore the monthly imbalances like this ones over here on Apple stock. They trust indicators more than price. You will see EMAs everywhere, oscillators, and you cannot even see price action. So, and price action candlestick analysis for stocks is the only non-lagging indicator. It just doesn't lag. A candlestick closes like here, there, it closes. It doesn't undo the signal like oscillators, okay? And we often forget, retail traders, stock traders forget patience even exists. When you zoom in too much to smaller time frames, you will basically be looking at the market through a keyhole. And you won't be able to see why are we expecting needs to happen for Apple to drop here, like a massive 30%. Why? So you won't even see it. So right now, Apple is overextended after a very strong rally. Okay, overextended price, expecting this for Apple stock. Apple stock today, price is 266. We're expecting a drop of about 30%. Trading far from high quality demand imbalances. It's losing momentum, being pulled by the magnetism of this new monthly demand level. If the correction continues as we expect, and expect that it will, 210, more or less $200 per share, becomes a realistic long-term reaction zone for 2025 and 2026. So final takeaways for Apple. Apple is not really crashing, it's just correcting. Apple is not dying, it will never die. Okay, Apple stock is just dropping. It is the nature of the markets. Apple is simply obeying the laws of supply and demand. So the same laws that in the entire market must obey in our lives and in the financial markets, in everywhere, even in relationships. So if you want to learn more about stocks, price action, option strategy, intraday trading, swing trading, using supply and demand balances, don't forget you will be welcome. We have quite a few courses that explain all these in detail. You can predict these movements with months, even years in advance, and that obviously will prevent you from making huge mistakes. If you like this video, click on the like button. I will be welcome into my channel. Have a great day.